Hello friends, welcome to the Stock Whisperer. Today we are going to see about the new IPO going to be launched, Indo Equipment Limited. So we already multiple IPOs we have analyzed over the last week. So if you look up to our channel, so you can able to see multiple past IPOs. If you're interested, you can watch that video. And before going to this Indo Equipment Limited comprehensive analysis, so I just want to walk through about the. So this one is a free AI stock analyzer. So what it will do is we can able to do the usually we need to do the manually we need to do the sentiment analysis, how the market is driving, and the technical analysis. What are the indicators we need to consider those kind of things, and as well as we need to consider the fundamental analysis, how the financial performance and valuation metrics are there for that each individual company. So this tool will really helpful because this one having the three each analysis, it will show it as individual scores with why this individual score is generated, those kind of things in detail about this in this topic. Yeah, so if you I have provided this link to this description. Please look out and let me know, post the comments if anything if you have. Okay, come back to our topic. Yeah, for the Indo Limited, first we can see the company overview. This company is established in 1994 and specializes in agricultural machinery and construction equipment. Last week we have posted the video from the Karoro, India. So that IPO as well, it looked like the same as this company. Next one is the products include tractors, 16 HP and two 110 HP tractors. They have manufacturing and pick and carry cranes, harvester combines, and rotavator. So these kind of products, they are multiple products they are manufacturing, and they have the manufacturing facility in Badi, Himachal Pradesh. So markets overall sales, how they are doing is domestic only 93% of sales is coming from the domestic and remaining 7% in the international market. Okay, so let's see the financial performance of this company as of March 31st, 2024. Revenue is financial year 24 375 crore, financial year 23 370, and financial year 22 352. So it looks like it's slowly, slightly, it is increasing the revenue. Net profit 13.7 crore, 15.4 crore, and 15.6. So it's also gradually increasing, slightly increasing. Net worth as well, 317 crore right now, and debt is 270. So debt is below the net worth, so less than 1. So it means it's okay. But they have a same kind of revenue, how much they are generating, same kind of level of debt they have. Market capitalization is 1000 crores as well. So come to the valuation metrics. What valuation metrics is really telling about this company? So financial performance is okay, average, below average it looks like. But what's the valuation metrics is telling is return on equity is 5%. It's very lesser than comparing to the FDs, our normal FDs as well. It is having more than the returns they can able to generate. So this kind of low level of return of equity is coming, and return on capital employed 8.96. That's fine. And P by E ratio, price to earning ratio, is 67x. So that's a huge. So actually they are quoting the price at the moment for the IPO prices very higher. 67x is very higher because actually the average industry average should be their industry average is 45, around 45x around, and it should be the company we need to good valued, undervalued, or valued stock means it should be in the 18x maximum. The price to book ratio is 2.55x, so that's fine. Price to book value is looks okay. For the interesting comparison, so if you're comparing with the competitor, Escorts Kubota Limited is providing P by E ratio of 96x and P by B ratio is 84. So comparing to this company, Indo Farmers Limited is good. But what it is, they are not generating any growth or any revenue more than that. So that's what I'm thinking. So conclusion in the topic. So far, based upon the valuation metrics and the financial performance, what I'm thinking is revenue growth is 3% in the 3-year average. So 3% is very low in the revenue growth I'm seeing. Debt to equity ratio is fine and moderate profitability and stable financial performance. Yes, this is moderately it is profitable. Like that means each year they are 5 crores increasing in each revenue and net profit as well. They are increasing 5 crores. So from my perspective, 67x is a premium call. That means it's overvalued for the IPO price. So I am thinking for the long term and short term, I do not buy this stock and I would not recommend to buy this. So if you have any other questions, please post in comments. And if you like this video, like and subscribe this video. Thank you.